Hi friends, Shripad here from Investry. If you are new to this channel, please subscribe. In this channel, I will bring contents about from my learnings for more than 5 years into Indian equities related to long-term swing trading and intraday trading. Today's topic of the video is going to be very interesting for those who are long-term investors. So basically, what are the top 5 mistakes or what are the top 5 lessons from my own experience of being in this long term investing for more than 5 years. So, the first one is the wrong stock selection. For any long term investor, stock selection is the most important step wherein you decide which sector or which stock you want to put your money on. And this is where you will use the data driven, you will do the sector competition and checking with the other peers. You will also do what is the valuation of the company and things like this. So what is the wrong stock selection? So basically, if you select a stock purely based on data, purely which is driven by maybe some screens, not going too much depth into what the company makes. So, especially for long term investing, you need to understand what the company makes, what are their products or services. Why it is very important? If you don't know thoroughly about the company, when the prices start falling, your conviction about the company will not be good and you end up selling it too early, or you take a chance of luck. So wrong stock selection. So you will have to do very very thorough research and analysis about the company, what it does, how is the competition, if there is any moat, and what is the export, if they are doing export and things like that. There are various factors, and I'm sure a lot of the time in a hurry to really deploy our capital that is waiting, we end up taking some shortcuts. So over the journey, you will learn and be better at selecting the stocks. Second is the wrong entry point. Now you have selected what stock to invest in. Now you have to enter at a right entry point, or roundabout a right entry point. Okay, so you have selected a stock ABC, and you thought, okay, the trend is reversing or there is a breakout, whatever the case may be, but you entered little late. You should have entered at 100 or maybe around 100, so 100 to 105, but you entered at 120, right? Now, as you know, stock market doesn't go linearly upward. Always there is a downward trend, and it picks it up. So especially when your wrong entry happens, so when the stock price start falling, your conviction about what you entered is not good. So that is why it is very important to wait for the right moment to enter. Okay, and if you are late to enter, leave it. I mean, wait for some correction and then enter at the right time, or round about the right time. Nobody can enter 100% right at the right price, but round about the right time. Next one is the portfolio allocation or the number of stocks. Now, in a long term investing, a golden question always asked is how many stocks to have, right? As per me, around 10 to 15 stocks is way a good number of stocks. Anything less than 10 becomes too concentrated portfolio, anything more than 15 becomes too difficult to manage. So somewhere around 10 to 15, you are able to balance your portfolio, it is good. Now, when it comes to your long term portfolio, you should have stocks which are from multiple sectors. Just to give you an example, if you have 1 lakh capital, you don't want to put all your 1 lakh into one or two companies or one or two sectors. Okay, you will have to divide that into at least 10. Okay, so meaning 10% of your capital on each of the stock. So this is a very good approach. And never ever put more than 25% of your capital in one sector. For example, you have IT stocks. You all know what is happening in the IT stock due to tariffs, and there are global tariff wars that is happening. So in situation when the complete sector is in a downtrend, you will get a big dent on your portfolio. So it is very important not to be over concentrated on one particular sector. Rather, you are quite diversified, but not too much diversified that also. So there is a balance. So I would say 10 to 15 stocks, maybe 4 to 5 sectors is good to kind of, for your long term portfolio. Next one is exiting too early. Okay, so what is this point? So we are, for those who are long term investors and also traders, okay, meaning they are also swing trading and long term intraday trading. Somewhere in the mind, your trading mindset comes in. Okay, this especially happens when you are exiting. Okay, suppose you bought a stock at say 100, and you initially thought, this has a good run up of 250 or 200 because you have bought it for long term. However, at 120 it started falling, and previous weeks cut below the price cut below the previous week. Now your trading mindset says, okay, this stock is falling and let me exit. This is not the right approach for long term investing. This may be the right approach for swing trading. And what is the right approach in such situation for long term is to basically go back to your fundamentals as to why you bought the stock, what kind of changes has happened in that fundamental, and you should have 2-point trigger in order to sell the stock. So one could be your price. So I would say monthly is better. So you have a downtrend monthly candles, and you also saw that maybe valuation is high. You also saw maybe back to back 2 3 quarters results are not that good, or there is something, an issue in that particular sector, and you think you need to exit. So always make sure, never exit your long term position purely based on the price. That is going to be a disaster, because after a while it will recover and go up. However, if your exit philosophy is based on two factors, one is the price as well as the fundamental change, you have a better chance of success. Next is the holding on to loser for very long. Now, at the same time, you know, price is not the only thing that is important for the long term investing. However, sometimes the price may give you certain clues about what is going wrong. And if you have a very big portfolio, imagine somebody is managing 25-30 stocks. It may not be very easy to kind of manage them on a day to day basis, what happened the previous day. It may be possible on a weekly basis. However, you will have to keep an eye on the price, also keep an eye on what kind of news goes in that particular stock. If there are any factors that will affect the long term investing, and you know not clearly understanding, if it starts falling, how until how much it can fall, right? So that is very important to know. And lot of the time we don't know, we leave it to luck and say, okay, it is a fundamentally good stock, but I don't know till when it can correct. So that is where you may have a certain kind of a big drawdown in your portfolio. However, one need to look at, you know uh, so even though you have bought the stock for long term, you should have a view about what is the max, I wouldn't call the SL, but what is the max drawdown you can accept on that particular stock. Otherwise, you hold it for endless time, and then it eventually comes down 50% down than what you bought, and then you may lose a lot of capital. So so to conclude, I would say long term investment is an art, not a science. Okay, so it is a mix of selecting the company, researching about the company, entering at the right point using the price action. Exit is more important. Sometimes if you have 10 stocks, all 10 may not be winners. Okay, so you may have 4 or 5 winners, 4 or 5 may lose the capital for you, but it's okay. You need to be able to take that judgment about cutting the losses early, not too early that it goes as a trading, but backed by the fundamental data. Okay, so hope this has given some good insight into the long term investing. Please like and subscribe this channel. If you have any comments, leave the comments below. I would appreciate. Thank you.